Welcome to the Snapshot edition of the daily video update. This is being prepared Monday, April 4th, where we'll look at the action in the market today and then see how things look for Tuesday, April 5th. Two quick things before I get going. If you watch these videos on Rumble, if that's your platform of choice, it might help you if you go ahead and subscribe to this channel for about a week now, since I'm posting videos every day. Actually, I'm posting 2 videos each day. It takes a long time for those videos to monetize. Now, that's not why I'm on Rumble. I think I've made $2 in the last year on Rumble. But my understanding is you don't see those videos unless you are subscribed. And so I have videos sitting out there that really nobody's watching, because they're not being flowed through the whole system. So if you use Rumble, if you like these videos, it will probably help you to stay more in tune with what's going on if you go ahead and subscribe. The second thing is, I did not achieve my goal of making all the videos over the weekend. I wanted to do one on the international indexes, I wanted to do one on the economy, and I wanted to do one on the sector. I made the other videos, but I didn't make the videos that I just mentioned. So I'll keep working on those. And as I get the energy to be able to do it, I ran out of energy. So, okay, let's look at how things were on Monday. We had an update. The S&P was up pretty strong. It was mostly due to the Twitter news. And Elon Musk has purchased about a 9% stake in Twitter. And that really helped give growth stocks some support. Now, that's usually short term. That'll come and go rather quickly. We're not seeing a lot across the board strength right now. The negative days that we saw near the end of last week, Thursday, and I'm even kind of counting Friday, we would have been down had we not seen that last 10-minute buying spike that actually gave the S&P a positive close. Yes, we do have to follow price, but we're not seeing a real flow going through the whole broad market. Now, at the same time, some of our oscillators are still positive overall, but there's some that are showing some weakness and some that are actually starting to turn negative. And if you want more of an in-depth discussion about that, please look at the full-length edition of the daily video update. So let's go back and talk about this. We had a mixed to slightly higher open. And I went into kind of a more in-depth discussion about that. Why do we see such a weird open sometimes, especially when the futures are acting one way and right at the open, we see things a little bit different. And I talk about that a little bit. We did, after the open got going, we saw buying, which took prices up to R1. As the day went on, we were able to get up to R2. And then late in the day, we even got above R2. We ended up closing at the high, and we were up 0.81% for the day. But volume was below average. It was greater than on Friday, but still well below average. Our technicals are positive, but showing some signs of weakness. We're still dealing with inflation, interest rates. That's a daily thing. The geopolitical concerns, my understanding is there's some real sad news coming out of the Russia-Ukraine thing with what is happening to a lot of the civilians and how they're being treated. And that might have some ramifications, not necessarily for the markets, but just on a world viewpoint. Everybody's kind of turned against Russia as it is. Is this going to make it even worse, which could potentially escalate things? We're still talking a lot about, and then the other thing is, there's really no news as far as a ceasefire or anything going on between Russia and Ukraine, but that could get better, worse, or stay the same at any given time. There are the inverted yield curves that are still kind of dominating what everybody's talking about. And then the whole oil issue that I discussed more at length on Monday's video, where it looks like we're going to tap into the reserves. That might help lower prices minimally, but then what's that going to do longer term? Those reserves are supposed to be for emergency use only. Is this an emergency? And then what's it going to take to replenish that oil if we bleed down the reserves And what's that going to do to the military if we need that oil for a military purpose? So there's the back and forth going on there. Now, what are some comments from Monday? The technicals are still positive, but showing signs of weakness. It was an up day, but it was not internally a strong move by any means. Then all the different geopolitical things that I talked about, and then the Elon Musk getting into his Twitter holdings. And this is just 9% that he just reported. We don't know how much else he owns. Maybe he owns a larger percent of Twitter. So we'll have to see. Very interesting person. Fascinating to learn about him and to kind of watch what he does. Whether you agree with him or disagree in certain areas, he's still fascinating nonetheless. The economic report that came out on Monday were that factory orders, and they did show a decline overall, but that's after seeing a pretty strong January. So the fact that we saw the whole Omicron follow through, that they're kind of citing that for right now. It's not a big report, but it's just part of the overall picture. Current market valuation still has the S&P fairly valued. As far as our trend, and this is becoming a little more of a concern, we are positive, but we're still weakening. And if the ADX continues to go down, and I'll show you the chart, we might get into a sideways type of a scenario. With the update on Friday, at least on a closing basis, and Monday's advance, the bias is positive. The momentum I'm still keeping mixed, because last Thursday did a lot more damage. At least it's still flowing through a lot of our indicators. And we're not seeing a real bounce in some of the other indexes right now. So I'm still gonna keep that at mixed for right now. So here's the daily chart where we saw the nice little spike up. Didn't really see that in a lot of the other indexes, but look at where we're at. We're coming right back up to what had been short-term resistance. Well, we broke down through that. Now we're coming right back up to this level again. If we even advance from here, are we going to get set to go a little bit lower, or can we break through this upward resistance? That's the big question. And you can see down below where volume did increase from Friday, but was still well below average overall. Here's the ADX. It continues to decline. And if we drop below 20, that will be an official trendless environment where we might chop sideways for a while, or we might just be getting ready to head in some kind of a trend, either up or down. It's still positive, and the buying power increased a little bit, but still we don't like to see this going down the way it is. And then here's the Arun, kind of showing a similar picture where we're seeing a decrease in buying power. We did see a little bit of a decrease in selling pressure. So we're kind of flat overall with our oscillator, but it is still above zero and positive. We were able to get back the 100-period moving average on the S&P. So now we are above all moving averages currently on our moving average rainbow, or not our rainbow, our spaghetti chart that I referred to. And then here's the rainbow right here. These are some additional moving averages where we're still seeing, can we break up above these moving averages, or are we going to fall back down into the moving averages? We are still above the 200-day moving average. So that keeps the long-term trend positive for now. So that's still okay. And then I just wanted to show this ETF here. These are the mega stocks, the big monster companies, where they were up 1.93%, but we're getting right up to the 200-day moving average. Is that going to be resistance? Are we going to be able to break through, or are we going to bounce down from there? So what's our outlook for Tuesday? The short-term overbought readings after having that really big runoff, are we still just wearing those off? Well, we kind of have worn most of those off now, and the technicals are weakening. We need to see follow-through buying to maintain a bullish stance. If we don't get a lot of follow-through buying on Tuesday, we might lose more of this positive picture that we're looking at right now. But the markets are still in an intermediate term range. We're still battling with growth versus value, the yield curve concerns, the oil supplies. The economic report that is coming out on Tuesday, there's two of them. There's the ISM non-manufacturing index. We saw the manufacturing index a week ago or so, Well, now we get the non-manufacturing index and then the trade balance, which is important, but not a real mover as far as the markets are concerned. And then all the different geopolitical concerns that are going on that really have not changed all that much right now. Our different scenarios. If we're looking for things to go down, what could cause the market to go lower? We're still coming off of that short-term overbought and resistance area that could push prices down. It worked at the latter part of last week. We saw a bounce on Monday, but are we going to continue down after that? We're also seeing interest rates up overall and the yield curve concerns that could have an impact on stock prices, either positive or negative. But I'm in this category, I'm looking more at the negative side for this scenario. The internals in the broader market areas are not showing strength. We're still below the 200-day moving average with the Dow and some of the other indexes, but we're still above the moving averages, the 200-day moving average with the Wilshire and the NYSE. So we're kind of in between with things right now. Okay, what's the scenario for stocks to go up from here? We saw that strength after we hit that, and I changed this to an intermediate term low. Okay, the oscillators are positive, but they're showing some weakness. Moving averages, we've broken above all those moving averages in the S&P, but we still have some moving averages ahead in other indexes that could play a significant role. Then scenario number 3, to go sideways. Yeah, and this is looking a little more likely now. An intermediate term range with wild swings, that's what's been preventing us from going into a trendless environment. 1 or 2% up or down day. The ADX stays strong when that happens. But now we're seeing the ADX weaken and in danger of dropping below 20. That could send us into a sideways pattern where we see a slowdown in price movement, and then we get into a choppy, trendless, go nowhere market. So these are just the 3 scenarios that I'm pretty much playing with all the time, and then the reasons for each. So what's our conclusion? The S&P is positive right now and could be breaking out of that range. That's still to be determined. In the short term, we're positive, but showing some signs of weakness because we're seeing a lack of broad-based strength. Intermediate term, we are positive, and our oscillators are positive, but some of those are starting to show some weakness. And the moving averages, at least for the S&P, were above all the ones that I chart. We're still below in some of the other indexes. So we have some support and resistance areas there. But our long-term trend still remains positive because we're above the 200-day simple moving average. So, and then the videos I talked about where I just didn't have enough energy or the ability to focus to get these other videos done, and I'll do that as soon as I can. And then here's some of the other videos that you also have available to you. So thank you. I hope this was short enough, but yet still helpful. Have a great Tuesday, and I'll do my next video after Tuesday's session.